In these turbulent financial times, it is absolutely essential to have protection for your hard-earned currency. I recently read a mainstream media article about 6 dumb places for leaving your money. Gold was listed as one of them. It essentially said, it is only worth the currency you can trade it for, and its value isn't determined by supply and demand. Gold is primarily a store of value. All currencies devalue over time, so as your currency devalues, gold's price goes up. As all the gold ever mined is still in existence, if there are no sellers at a certain price, the price will need to increase. So its value is determined by supply and demand. The following 11 currency charts will show just how good a store of value gold is over time. Australian dollar. 500 Australian dollars saved in a bank account since January 1990 wouldn't purchase $1,700 worth of goods and services today. An ounce of gold purchased for $504 in January 1990 can. That's a good store of value. Canadian dollar. 460 Canadian dollars from January 1990 couldn't purchase $1,700 worth of goods and services today. An ounce of gold purchased for $460 in January 1990 can. Still not convinced gold is a good store of value? Swiss franc, a well-known stable currency. 614 Swiss francs from January 1990 can't purchase 1,277 Swiss francs worth of goods and services today. An ounce of gold from January 1990 can. That's a store of value. Euro. 310 euros from January 1990 can't purchase 1,169 euros worth of goods and services today. An ounce of gold from January 1990 can. That's a good store of value. UK pound. 247 pounds from January 1990 can't purchase 998 pounds worth of goods and services today. An ounce of gold purchased in January 1990 can. The same applies to the Indian rupee, the Japanese yen, the Russian ruble, the Saudi riyal, the US dollar. Lastly, we have the South African rand. 1,100 South African rands from January 1990 can't possibly purchase 18,550 rands worth of goods and services today. That same ounce of gold purchased back in January 1990 can. That's a good store of value. All this data is from a period of time when the price of gold was manipulated by the London gold fixed banks, of which Deutsche Bank was one and admitted to doing in April 2016. These 11 currencies are real-life examples of their failure to store value since 1990. Most other currencies have the same chart pattern. Gold has clearly succeeded in storing value. If gold is only worth a currency you can trade it for, why do central banks own it? Why do very wealthy families buy it in times of financial uncertainty and pass it on from generation to generation, thereby protecting their fortunes? What can you buy today that you don't have to take out a loan to pay for, that doesn't have the risk of going to zero in value, that can't be used to bail in a failed bank, that won't cost you any management fees over the duration of holding it, and will store value for you? Physical gold is the answer. If you found this video helpful and informative, please like and share it. Thank you for watching.